Alana are going to be leading this. So a little bit of background. So I run our investment brokerage team that focuses on the sale of our assets. The majority of what we do in the office, as most of you know, is multifamily. We do other types of assets. We do ground up development. We do a lot of deconversions, which I'm sure you guys have heard about. And then we do mixed use deals as well. But for the majority of what we do is within our own specialty, which is multifamily. So I'm going to talk a little bit about the process and how we go about valuing the properties, finding the properties, and then Alana is going to speak in more detail about the marketing and what tools we have available as a firm to market these assets, and then how we go about getting them done. So I'll let Alana give a little bit of a preview as well, and then we'll jump into the slides. And the goal here, guys, this is one that people know a fair amount about already, so we're not going to get into the nitty gritty of valuation, but we're going to go through the process, and we're going to let you guys ask a lot of questions about why you choose to do one thing over the other, and then really get into the next level of marketing that we've been driving with Alana and with the technology that we've been adopting. So, Alana?
Thanks, Sean. I think you just hit the nail on the head there. Obviously, we're going to share this with everybody afterwards, so you are going to see we've linked a couple of things within the presentation for you guys to be able to get into, dig a little deeper. We're going to talk about a lot of things, top level, and then obviously we're going to open up the end. We want to leave a whole bunch of time for questions and answers because there's so much that goes into the sale and marketing of properties. We obviously couldn't cover it all in just this presentation. So we'll try to give you guys a little insight into what's available, toolbox that we have, how to use them, when to use them, things of that nature. So exciting. Can everybody see the at least first slide? Okay.
Yeah.
Mm-hmm. Cool. All right. Let's do it.
All right, so first, what's an investment property? What we are talking about when we are discussing selling property, at least from our perspective, is we are looking at investment sales. So we do residential sales as well, single family homes and condos, but it's not our primary focus. And in fact, we've been pretty impressed with some of the sales that have happened in that without us necessarily trying, through a lot of you that are doing your own sales on the side, which is very cool. But when we're discussing from an investment brokerage standpoint, what we're trying to sell, these are investments. So whether they're long-term investments, whether they're short-term investments, that's what we're targeting. Oftentimes, we deal with two types of investors. We deal with the value add investor who is coming in and finding properties that have the potential to be rehabbed or repositioned and sell for much more, or refinance for much more than the basis that people get into. And then we also have stabilized assets. So stabilized assets are going to be a little bit more turnkey. People are going to be buying them as a long-term wealth builder or preservation, and it's not going to require as much work. They're typically more expensive, but they end up being assets that you can kind of plug and play and hold for the long term. So those are the properties that we're discussing as we talk about investment property. And then I'm gonna stop at every slide. Some I don't expect any questions, but any questions off the bat? Okay. So the process, and we discussed this in one of our first trainings, broker opinion of value. So we get brought in to value properties on a cash flow basis to determine what the value of the property is, as long as they are cash flowing assets. Sometimes we're dealing with repositioning of assets where you're taking for example, an office building and turning it into an apartment building with a hotel lease, or a vacant property where we're coming in with our construction team and figuring out what the cost is going to be to put everything back together. But ultimately, what we're doing is you're getting to a cash flow analysis, taking the income of the property, the expenses of the property, coming up with your cash flow, and then doing a comparable analysis based on not only price per unit, price per foot, but cash flow of assets within that submarket to determine what the value of the asset is. After that point, then we really start to get into the nitty-gritty of the marketing. So the next stage is the sales strategy, which we're going to discuss, and then the marketing piece, which Alana is going to go over. So we'll get into the depth here on the next slide. So broker opinion of value, again, we just discussed this, but we're looking at the condition of the asset. Is this something that's going to be a turnkey asset? Is this something that is going to be a value add deal? What is the in-place income? What are the in-place expenses? And then oftentimes you'll hear people talking about pro forma. So pro forma is looking at the future value of the asset, whether it's the income side that you're manipulating, the expense side that you're manipulating, and then where can we push this asset? So you may sell something at a 5% return if it is completely turnkey and there's nothing to do. But you may sell something at a lower cap rate if there is upside to improve the asset, and then to get to a higher cash flow, refinance the property and pull your money back out. This slide, guys, this is for you to go through later. We've provided links to a lot of the BOVs. We're not going to get into the BOV. It's too much information, but we've included examples so that you can come back and take a look at how we put together a BOV and the information that goes into the valuations. Again, we discussed this as far as using comps to determine the sale price. We're looking at the performance of the asset as it is, as well as where the asset can go. And really, it's a fine line of blending. Is this an add value deal? Is this a stabilized deal? Is it a combination of both? And all of these things are part of the sales process and determining the best way to pitch an asset before you go to market. So this is something that, as brokers, we're discussing with the sellers on the strategy to get the asset sold. So selling strategies. So this, I'm going to go through some examples on this one. This is a number of different ways that we go to market with properties. The first one that we have here is an unpriced asking price. This drives me nuts if I am looking to buy something. I think it's very frustrating when things are unpriced. However, it does make sense sometimes. A lot of times, in my opinion, when somebody goes unpriced to market, they want a number that's probably not achievable, or where I think it's more appropriate, the asset is so unique that you need to have multiple people look at it in different ways to determine what the value is. An example of that is in 2007, I was doing brokerage and I came across a deal in the West Loop in the middle of the stall out in the beginning of the recession, and it was a 20-unit frame construction, brick and concrete construction building that stalled out. It was a walk-up. Nobody knew what it was going to cost to get finished. There was no financing available in the market at the time. So we went out unpriced on that asset and then collected the entire market for offers, and ultimately went to the bank and had to negotiate down a short sale in order to get that done. So sometimes when you need that type of ammunition in order to determine A, what the market value is, or B, to prove to somebody, if you're going to end up in a position that's short of where everybody wants to be, that this truly is the market, rather than going out at a price that's not achievable and getting no activity. Any questions on that?
Nope.
Okay. Overpriced asking price, looking for 1031 exchange buyers. So we're seeing a lot of this right now. Sellers always want the top of the market, and oftentimes you'll hear them discuss they're looking for 1031 exchange money. 1031 exchange is a way to defer taxes, and oftentimes it motivates people to maybe pay a little bit more than what the market would pay for an asset in order to avoid that taxation event. So these will often be deals that are turnkey, very well located, and people will push to go below what the market cap rate is to try to capture those buyers who have a short window to transact. Questions on that? All right, underpriced asking price to create a bidding war. So you see this more towards the residential side of real estate. You know, if somebody drastically underprices something and it's out on the open market on the MLS, you will see a bidding war. So sometimes it is actually a strategic move to go under the value of the asset, and then to have people come in and bid each other up and eventually get to a price that is where you wanted to be, if not higher, with very, very tight terms. So this works well in very efficient markets. Chicago is a very efficient market. There are a lot of investors. There are a lot of different buying groups. They know if something is priced wrong, and you know as a buyer or as an agent if you underprice something, because the first day that people show up, you have 25 showings. And oftentimes that means that you're going to get into a bidding war, and somebody's going to come in with really good terms to try and win it. People get competitive, and they may step over the price that they needed to be at. Auction, again, this goes kind of towards what we were talking about earlier. Auctions often we will do if an asset is really hard to price. So if you're in a market where there aren't that many comps, the building doesn't really have cash flow at the current time, or it's an asset class that's really in trouble and there aren't that many people looking, oftentimes an auction will occur that will create a bidding process to the best of the ability and then bring those offers to a head quickly. We're seeing that a lot right now in the hotel space. So right now there are a lot of hotels that have been devastated during COVID, and they're empty and they're going to auction. So I'll actually circulate an example of an auction property so that everybody can take a look at that. They're pretty interesting deals. CoStar, which is one of the large commercial listing sites, bought a company called auction.com. So they're really pushing to get auctions kind of to the forefront. The issues with auctions is that if you don't set a minimum bid, you can end up selling it for significantly less than what you may want to do. So you'll see in auctions that there's often a minimum bid price that if they don't hit, they do not have to sell. Open house, again, this goes a little bit more towards the residential side of things, but we do see it in unique situations where you just schedule times for people to come through. This is something that we would do if we were selling an asset that needed a complete rehab. There's not much to see. It's from a construction standpoint, you don't mind having a lot of people walking around at the same time. It's a little tacky to do that in the investment brokerage world because you do want to make your clients feel like they're getting special attention. But if you are, you're selling a vacant warehouse, this is something that could work well. And then the last thing we'll touch on is selling on the MLS versus private listing. A lot of the clients that we work for do not want their properties on the MLS. The reason for that is that, as you know, they have tenants and they don't want to spook the tenants. So we very often don't use signs. We won't post in places that are easily accessible. We post on places like spook tenants, as you can imagine. Any questions before we move on to the next slide?
I have a question, Sean.
Sure.
How, if somebody, looking through all of the selling strategies, what advice do you have to determine which one to use for a property? Is there a way to do it, or what's your best advice?
Sure. So it really is asset specific and investor motivation specific. So if somebody has a deadline to get something sold, they may want to auction the property, because when you go to auction, you dictate the terms of when the diligence will be, what's available. Most of the diligence is done up front, and you set a closing date. And then whoever matches those to the best of their ability ends up winning the deal. So you get certainty of close. If somebody is fishing for the highest price in the market, then you may want to go out overpriced and just sit and wait to see if somebody comes on a 1031, because those are timing specific, but you need to go wider. That's not the type of thing that you can do with a pocket listing, because oftentimes these are national or international buyers looking to deploy capital, and it's a timing event. And then if you're looking to move something incredibly quickly that has issues, doing an open house and a combination of all of these is probably the way to go. So it all just depends on the motivation of the seller and what their end goal is. Do they want the highest price? Do they want to move it the fastest? And and then really understanding what their motivation is how we determine the best strategy.
Cool. All right, guys, I'm going to jump in here. Sean took you kind of through the first 3 steps in the process, the BOV, determining a sales price, and then of course your selling strategy. When it comes to marketing of the property, the most important thing is to absolutely have a plan. The difficult thing, and Sean touched on it, is depending on the type of property you're selling, the type of client you're working with, there is no one size fits all plan that may be the way it's done kind of on the real estate, on the residential side. But when it comes to these types of properties, the whole idea is to be aware of everything that is available to you and use the things in the mix that work for you. So we're going to go through some of these things in detail. Again, you'll see we've listed a couple links where you guys can look into some of the OMs or offering memorandums, marketing materials in here. But we're not going to take you through them right now. Like I said, most important, have a plan and make sure that your information is accurate and put together and presented in a very professional manner. When you've completed the first 3 steps in the process and now you're ready to market your property, the most important thing to do is to kind of go through this checklist in your head of what needs to be done and what you can do. When you are creating your OM, again, make sure everything that you're putting in there is accurate. Make sure you're putting in as much information as necessary to be able to give a comprehensive look at your offering and its work. Key to all of this is you've got to do the work. Very similarly for exposure, make sure your photos look great. Yes, many of us can take super photos with our iPhones and other things, but depending on the price point of what you're trying to sell here, bring a professional in, spend the money and have it done right. Number 3 here is something that you should be doing at all times is make sure your database is up to date. You never know who in your database is going to be interested in something you have or know somebody who would be. So keep in touch with everybody in your database, stay in tune with what they're looking for, what they have. You just never know what kind of a buyer or seller or contact is going to already be within your database. Pick up the phone, cold calls, still the very best way to get things done. This I think, really came to light through the pandemic last year when people were home and things had slowed down and people had time. And I feel like we're hearing a lot of really good success stories. When people had downtime, they were calling people, they were touching base with people, they were staying top of mind to them. So I feel like that is a practice that should be happening, pandemic or not. Talk to people. If you obviously meet with them, do what you need to do, but stay in touch. Sean mentioned this one as far as promoting your listing everywhere that you can. Make sure you are casting the widest net you can based upon the type of property that you have. Public sites like LoopNet, CoStar, Crexi, MLS, the more exposure, the better. Obviously depends upon the needs of your client, the confidentiality of a listing or what you've had. And then just a little note here, square footage. A common cause of real estate lawsuits is square footage. So engage with a professional as far as if a space planner or an architect. So if you're putting that type of information in your marketing package, which you should, don't guess and don't round up for marketing purposes. And if you don't know, get a professional or disclaim the information. Does anybody have any questions on this slide? There's a whole bunch more we'll go through, but we can stop if anybody does. All right, onward, here we go. Additional things to keep in mind. Signage, Sean talked about this. Sometimes you're going to use discrete or no signage, depending on what's going on at the property. But if you have a property that allows for big signage and appropriate signage, make sure you take advantage of whatever's there. I threw a little example in here of a little a V sign, on in the front of a property, stakes into the ground. Make sure your signage is highly visible. Obviously, have us create it for you to stay within brand standards and information and what needs to be there. It's not only to get eyes on the property to call you, it's just great exposure for you otherwise. I hear lots of times when somebody might have driven by or seen a property and they received a call, and maybe that property wasn't a fit, but now you've got another person that you can add to your database to keep cultivating those relationships and folks that you've got. Another thing is obviously social media to promote your listings. I feel like we've gone to such a digital era, and so many things are based on social media. The key is use your business Facebook business page to promote things, and then share to your personal. Obviously, share through LinkedIn, any outlets that are available to you to market your property. Take advantage of them. Obviously, the social media sites, there's no cost to you. Typically, people who are following you in the various platforms are following you because they're interested in what you do. So keep all of that up to date. And remember, with the different social media sites, there's different uses for all of them. Facebook, obviously, huge platform. Lots of people follow it. Instagram, more image focused, more photo focused. Twitter, if you're kind of keeping up with professionals and, throwing little blurbs of information about there. And while LinkedIn might have a smaller audience, they're typically industry professionals and typically those who would be interested in what you have to do. Addition to that, public relations, something we do a fair amount here, not only with a closing or a sale or a lease completion, but if you have a incredibly unique or rare type of property, utilize PR. Oftentimes there are no costs to it. You can't guarantee that you're going to get coverage of it, but anytime you have somebody else promoting and talking about your property or what you have doing, it is worth its weight in gold. So that is always an option and something to consider. And then email and email blast campaigns. Two different things that we're going to kind of get into a little bit deeper on the next slide. These are great things that everybody should be doing. It's just a matter of knowing what to use at the time and for what you want to accomplish. Make sure you're using the right platform, make sure your messaging is correct. And when we're talking about, building that database and having, everybody that you want to nurture and cultivate through your database, a strong database is absolutely necessary for when you're going to email something out. It's only as good as who's in your database and how well you maintain it. And if we're talking about databases and lists, Sean was going to kind of just jump in a little quickly on kind of some of ways to build some lists and kind of establish some contacts. Unmute. Sean, you're muted.
Sorry about that. I saw, Gabby, do you have a question?
Oh, yeah. So in the previous slide, you were talking about square footage. I know like when a broker does, at least in some cases where I've seen a lot of times a broker will do the estimated square footage. You talked about liability. Who is liable at that point? Is that the brokerage or is it the seller if there's an issue with the square footage on the listing?
Yeah, so it depends. Most of the time, it's going to be on the broker. If a seller provided a rent roll that they represented that was accurate and the broker relied on that, first of all, shame on the broker because most sellers try to fudge those a little bit. But it'll mostly go to the broker. We do have liability insurance for that type of mistake, but we encourage our guys to carry lasers with them and measure. And then we always try to estimate down rather than up. So if there's some upside in the square footage, it's a win instead of a loss, because I have seen deals blow up over that. It happens a lot. And in the multifamily space, less so. In the retail space, big time, because those leases are done off of square footage. So if you're wrong on the leases and then somebody comes in and realizes, man, I have 100 feet less than I thought I did, that's a big deal.
Got it. That was my second question about the commercial versus residential. Thank you.
And Gabby, in that sense, best thing you can always do is in the disclaimer language that you're putting at the bottom of any of your marketing materials or anything you're sending out is just to put the verbiage in there that it's either estimated or may or may not be accurate. I can't say when I see those, but it's also the best way to protect yourself to just disclaim it at the time.
Got it. Thank you.
You bet.
So as far as databases are concerned, what we do to build databases, it's really organic to begin with. There are a lot of people that go around trying to sell databases, and oftentimes that's just garbage information. To build a database takes work, and it's hard work. So what we do is we comb through records. We find people that have transacted within the market that we work. So a lot of our brokers will work specific markets: South side, west side, north side, and then suburban, and really even drill it down further to asset size, asset class. And as you go, you build databases that have emails that are accurate emails for the people. We try not to inundate people with too much junk broadcasts. Some brokerages just kind of send out everything, and we really try to segment it so that we're not overwhelming people. At the same time, we also want to get our messaging out that we're doing a lot. So what we tend to do is with our databases, we'll broadcast our specific listings to individual brokers' databases. And then we do a roundup where we bring in all of the listings once a month and then broadcast that out so that everybody can see the breadth of everything going on. We also have inbound leads. We get a lot of people who reach out to us looking for product. That happens a lot more on the buyer side than it does on the seller side. But we also get inbound leads off of the website for sellers. So we build that database. You try to cultivate it. You want to understand who everybody is in your database, and that requires it really requires interaction. Whether that interaction is done one-on-one, which takes a lot of time, and that's really the base for building the database, or whether there's some kind of engagement at a different level, which we'll have Alana talk about when she talks about drip campaigns. So, but that's how we build our databases.
Does anybody have any questions on kind of these key points? And this is when we first started, and we were talking about how we want you guys to think of these things on the past 2 slides as what's in your toolbox. It isn't that you're going to use all of these things for all the properties all the times. Everything is different. It's just understanding the depth of what's available and how to use it. And then you guys will see on here just finally, and this is super important. I'm just going to hit on this quickly, and then we're going to dive more into some email and e-blast type things. Talk to brokers both in and out of the office. Share your listings and cooperate. That's such an easy thing to say, but I feel like so many people neglect to do, especially last year when people weren't in the office. There wasn't as much of, chatter amongst brokers and coworkers. So just something to keep in mind, talking to people, because you never know who's going to know somebody. All right, we are going to dive into the 2 different types when you hear emails versus e-blasts. First, we're going to talk quickly about e-blast. These are property specific, and the way that I like to think about these, this is kind of digital cold calling, for lack of a better term. If you were just to pick up the phone and say, hey, Sean, I've got this incredible property coming to market, you would talk him through it. So by emailing something out, you're doing the very same thing. So it is just collecting all the information needed to put the information out that you want to. This is just kind of 2 quick examples of 2 that we have done. But you just go through the process of putting in all the information that is needed, everything from property address to highlights to any type of financial summary that's needed. And then generating, we do these through Pardot and through listings in Build Out. But sending out a property specific e-blast is a quick marketing piece. And like I said, it's like a cold call coming through your email that can go to anybody in your database. The other thing is looking at and talking about like email and drip campaigns. And this speaks to what Sean was just talking about mining data and collecting databases of contacts of people. If you are looking to get information to people that isn't necessarily property specific, you would create what we call a drip campaign. And I know some of these are likely hard to see. They were just kind of quick examples. And what that means is you're hitting people, usually a big group of people, sometimes when we're gathering these databases and these lists, they could have thousands of people in them. So, and these are not always people who have opted in to receive your information. So you have to think of it as a tree of how you're going to touch them with information. So you're going to reach out with your first message to them. Depending on what action they take from that, they kind of go down and get dropped into a various bucket. If they open it, then, you know, they would kind of go down this side of next steps to take. If they don't, they kind of go into another side. And just because they didn't open it doesn't mean we're not going to hit them with another message, but we're going to change the messaging for what we're doing to reach them. And kind of these drip campaigns are very effective when they're used. Obviously, you can see this one kind of copy of a deconversion campaign when we're looking to showcase our services and things that we can do in the sale and marketing scope of things. It isn't necessarily done to promote a property specific type thing, but this is a great way to get the information that we have that we can do deconversions. And a campaign of this nature would be sent out saying, hey, we get the list of the people who might be on the board for various condos in a specific area that we're looking to hit, and you hit them with the information. And that typically yields, I know in our case, and particularly with Matt, it had led to some great results. Another example over here, if you were using a system like Woodpecker, you would send out an email, you would put in there some of the information you wanted to do. And what we were trying to accomplish with this one is to schedule a meeting to learn more. And the great thing when you're doing campaigns like this is always being able to see your stats and see your results. So you know what you're doing and you can adjust them. And I think the key anytime you're doing a campaign like this is obviously making sure your messaging is right, but also being very nimble and able to change things depending on, you know, how your campaign is going. So I feel like in this day and age, so much is done digitally now. So utilizing campaigns like this, if it's just an e-blast to get something out there, or any type of an email or drip campaign to kind of stay in touch with people, are extremely effective marketing tools to have available. Does anybody have any questions? I know we just ran through a ton of information on these slides, but as Sean said in the beginning, we wanted to give you guys a really high overview of the 4-step process of what to do, how to, you know, get the property to market, and then what to do when you are marketing it. We want to open up, and hopefully you guys are going to have a ton of questions to ask of us, and hopefully we can answer them. Silence, no questions, guys? Nothing.
You were that thorough.
Yep, it was that thorough.
Or that overwhelming, one or the other. Sean, mute. You're on mute.
Sorry, guys.
Seymour.
Guys, reach out to myself, to Alana, to any of the brokers if you guys ever have any questions about the marketing process and how that works. And we'll circulate everything so that everyone can watch this on their own time as well. But any questions, don't hesitate to reach out. And thank you guys for joining us over the lunch hour.
Yeah.
Thank you so much.
Thank you.
Bye.
Bye.